Hi guys, welcome back to Trademanza's weekly educational series. In these videos, we bring to you interesting things such as the business models of companies listed in the Indian market and trend analysis tips so you can profit in all sorts of market situations. So if you've been watching our videos, you know that last week we started with indicators and the first indicator we covered was RSI, and I mentioned that we would be starting with the MACD in this video. Before we get started with the video, do subscribe to our channel, switch on notifications and like our videos. Now let's get started with MACD. So once again, just like the RSI, the MACD also has a backend formula, which we really don't have to get into, but I'll give you a gist of what it is. So we can see this blue line over here. This blue line is basically the subtracted version of the 26-day moving average and the 12-day moving average. And just like the RSI, you can go to the settings and manually change the length to two moving averages, which you prefer. And then this red or orange or whatever color it is, this line here is the 9-day exponential moving average, which can be taken as the signal line, because what happens is when you have the subtracted line of these two moving averages going above the orange line or below the orange line, it can be used as a buy or sell signal. Whereas these histograms are also very important things actually, because a lot of people don't cover the significance of these histograms, but I find these histograms to be more useful than this crossover itself. So the first and the most basic strategy which most people use when it comes to the MACD is that when the blue line crosses above the signal line, you take that as a buy signal, and that is a signal to go long, right? And we can see countless times over here, as soon as the blue line crosses the orange line, which is the signal line here, we see a good up move. Then there's a consolidation for a while in which the blue line goes back below it, and then once again, when the blue line has crossed it, it can be taken as a buy signal. And the same thing is happening even in this big trend reversal here. Another interesting thing, the histograms, is that these histograms can actually be used to find out the strength of a trend, and you can also use these histograms to see a trend reversal before it's going to happen. So when I'm talking about that, I'll tell you what I mean. Look at this place here where the crossover finally happens. After that, Nifty gives us a good up move, right? As we see Nifty going up and up after this big green candle here, we can see that even though the market is going up slowly, these histograms are actually going down in number. So you can call it a tick down. So when you see a tick down, you can take it to be two things. Either that the market is going to consolidate, which is what we saw happen here. And if you use this indicator correctly, you would know that the signal was given right here, even before the consolidation started. So you can use them to find out trend changes or consolidations before they happen. And you can also, use them to find out when the strength of a trend is weakening. Like for example, the best example I can give you here is this one. We see Nifty fall over here, and then there were two actually really big gap ups and really big green candles. But what we notice is that there's barely any movement in the histogram. If we look at the red candles on the histogram over here, they are way stronger and bigger than the green candles which were formed, which indicates that this up move is possibly a false breakout, or this move does not have good strength, which was reflected in the next few candles after that, as there was a big down move. But now again, in this big down move as well, we can see that these red candles here, right, the red histogram, there's barely anything, right? And even after this red candle here, we see that the red histograms are now starting to tick down, after which we saw a very big green up move supported by these big green candles. Now again, talking about the same trend reversal, if we see when Nifty tried to do this retest over here, what happens is that after that, the histograms are not going up in number anymore, right? Once the histograms stop going up in number, or they start consolidating like this, you can take that as a signal that the trend might be over, and you can use that opportunity to book your profits. And as we can see here, right after that, suddenly there was this big red candle formed, and the this line here, which is the subtracted version of the moving average, crossed below the sell line. The most simple technique to use this indicator is to look for an upwards crossover as a buying opportunity and then a downwards crossover as a sell opportunity. These kind of things can be used to enter a trade, right? You can use a crossover as a buy signal, and you can use a crossover on the downside as a sell signal. And the other way to use this is that you can also identify when a trend is over so that you can use it to book your profits. Like what we see here is that even in this case, we see that while Nifty is going up and up and up, the histograms slowly start to reduce in volume. Then when there's a consolidation, we see that the moving average is finally below it. And this thing happened right here. The blue line crossed below the signal line right at the formation of these red candles, indicating that there could be some weakness to come. And then we saw this consolidation period. Then you could wait the consolidation period out. And after just two green candles in the move, we can see that the blue line here has crossed above the signal line, which can be taken as a buy signal. So guys, this was a very basic idea on how to use the MACD. Now we've covered two indicators, one being the RSI and the second being the moving average convergence divergence. These are the two most widely used indicators, and in the coming few weeks we're going to cover a few more indicators, and then finally we're going to start with videos where we bring to you different types of trading strategies so you can combine a lot of things. You could just use price action along with the RSI, or you could use the moving average along with the MACD. So we're going to bring to you different strategies like this where you can combine indicators.